Hello everyone. Today we are taking a deep dive into this Financial Times story. BlackRock's ambitious India shakeup falls short. We are going to break down exactly what happened here, what the potential upsides are, and what the real risks are that every investor should know about. But before that, you are watching Let's Decode the News, where we take the biggest business and finance stories and decode them so anyone can understand. If you are not subscribed yet, hit that button right now. So let us get into the Financial Times story. When the world's largest money manager decided to partner with Asia's richest man, expectations were high that the combination would disrupt India's $900 billion mutual fund industry. Two giants joining hands to shake up one of the fastest-growing investment markets in the world. On paper, this looked like a sure thing. And that is exactly why what happened next is so worth paying attention to. Now let us look at what actually happened after the launch. 9 months since the first funds were launched, assumptions of a shakeup by an ambitious joint venture between BlackRock and Mukesh Ambani's financial services group have proved premature. 9 months. That is all it took for the hype to collide with reality. The Financial Times does not use the word premature lightly. That is a very polished way of saying the plan simply has not worked yet. And when you look at the actual numbers, it becomes even clearer. Assets under management at the venture, BlackRock, have fallen to 175 billion rupees at the end of February from 178 billion rupees raised for 3 funds in July last year. They raised more money at launch than they currently hold. Money came in, and then money walked back out. For a venture that was supposed to revolutionize an entire industry, that is a very uncomfortable position to be in. But here is what really matters. Why is this happening? The company, which argues that its technology can lower costs, has struggled to make major headway against an entrenched network of distributors that dominate India's asset management industry. This is the real problem. BlackRock flew in with cutting-edge technology and a bold vision. But India's mutual fund world runs on relationships, trust, and a very old distribution network that has been built over decades. And here is where a top industry insider gives us his honest opinion. BlackRock has taken a path which is very unusual, said Dhirendra Kumar, founder and chief executive of Value Research, an Indian mutual fund advisory. They have not gone through the standard distribution model at all. When the founder of India's most respected mutual fund research firm calls your strategy very unusual, that is not a compliment, that is a warning. They skip the playbook that every successful fund house in India has followed. Now let us understand why BlackRock even came back to India in the first place. The 50-50 joint venture with Jio Financial Services is BlackRock's second attempt to crack the Indian market. In 2018, frustrated with its minority stake, the US money manager exited a decade-long partnership with a local financial company. They tried once, it did not work, they left. And now they are back, which tells you how seriously they believe in India's growth story. But coming back does not mean the mistakes of the past will not repeat themselves. And here is the moment that sealed this whole deal. A shared car ride between Chief Executive Larry Fink and Ambani in 2023 sealed the deal for BlackRock's return. A conversation in a car changed the direction of billions of dollars. That is how deals get done at the very top of the financial world. But now that conversation has to turn into actual results. And right now, the results are not there. Now let us look at what their big public pitch to Indian investors actually was. Fink urged Indian households to invest their savings to share the prosperity of the country's expanding economy. If you believe in the era of India, we need to compel hundreds of millions of Indians to invest alongside the growth of India. A powerful message. And honestly, the long-term vision is not wrong. India is one of the fastest growing economies in the world. But there is a difference between a great vision and a great product that delivers returns. And right now that gap is very visible. But here's what the people close to this deal are actually saying about the AUM drop. People familiar with the matter attributed BlackRock's decline in assets under management to withdrawals from an early set of highly liquid cash pools, but they expected stickier, longer-term investments during the next phase of growth. So the insiders are saying, do not panic. The money that left was short-term money anyway. The real test is whether long-term investors stay and grow. That is a fair point, but it is also exactly what you would expect someone to say when the numbers are not looking good. And this is the part that directly affects your money. India's asset management industry is dominated by established fund houses backed by large lenders including HDFC Bank and the State Bank of India. These are not just competitors, these are institutions that Indian families have trusted with their savings for decades. Beating that kind of loyalty is not a technology problem, it is a trust problem, and trust takes years to build. Now let us look at the strategy they are betting everything on. BlackRock's strategy leans on the technological advantage of its portfolio management system, Aladdin. Aladdin is BlackRock's crown jewel. It is a risk management and portfolio system built over 40 years. It is genuinely world-class technology. But here is the thing. Technology alone does not convince a first-time investor in a small Indian town to trust you with their savings. However, more than 70% of individual investments continue to be channeled through distributors, according to the Association of Mutual Funds in India. 70%. That is the reality of how India actually invests. And BlackRock tried to bypass that entire system. That is a very bold move, but right now the market is telling them it was too bold, too soon. And here is what BlackRock's own top executive said about Indian investors. Indian retail investors are buying good mutual funds, paying very high prices, paying high distribution costs. BlackRock's chief operating officer Rob Goldstein said, he is not wrong. Indian investors do pay high fees, and if BlackRock can genuinely bring those costs down, that is a real service to millions of people. But you have to first get those people through the door. And here is the most honest thing said in this entire article. It's very early days, but they have some game plan, and if they succeed, I think it will be very significant, said Kumar. This could be a paradigm change if they succeed to achieve scale. If. That one small word carries a lot of weight. Even the people who believe in BlackRock are saying, the jury is still out. And that is the most honest assessment of where things stand right now. All right, here is my take, and I am going to be completely straight with you. What is good here? The vision is genuinely compelling. India's mutual fund penetration is still very low. If BlackRock can bring costs down and reach investors in smaller cities who have never invested before, that is actually great for India's financial future. What is dangerous? First-time investors who put money into BlackRock's equity funds based on the hype of two massive brand names are now sitting on negative returns. That kind of early experience can put people off investing for years. That is the real damage here. What could be better? The decision to completely bypass India's distributor network was too aggressive too soon. You cannot change the behavior of an entire market overnight. The smart move would have been to work with the existing system while quietly building the direct channel on the side. What this means for your money? Do not invest in any fund, no matter how big the names behind it are, without looking at actual performance, actual costs, and actual track record. A car ride between two billionaires is not an investment thesis. Do your own research, always. If this breakdown was useful, hit that like button right now. It genuinely helps this channel grow. And if you are not subscribed yet, do it now so you never miss a story like this. Now here is my question for you in the comments. Do you think BlackRock can turn this around and become a major player in India's mutual fund space? Or is it too late to win Indian investors' trust? Drop your answer below. I read every single comment. I will see you in the next one.